right, welcome back everyone. I hope everyone enjoyed their lunch and very excited to kick off this afternoon. And we're going to do that by welcoming Julia Salnikova, our next speaker. Julia is a VP of Financial Wellness Solutions in the Group Insurance Division at Prudential. She spent over 20 years focusing on innovation in financial services and is currently working to explore new models of consumer engagement and technology within that role. And today she's going to talk with us about the role of financial wellness in insurance and where we might take the next steps in improving the experience we offer there.
Everyone, my name is Julia Salnikova. I lead financial well-being initiatives, and I'm also a business ethics officer at Prudential's Group Insurance Division. Now, you may think it's an odd combination of responsibilities, but I will tell you, since taking on both roles, I see a tremendous overlap in how we approach ethics and building financial products that are inclusive and designed for people first. So I'm excited to record this talk for the FXD conference, and hopefully we can have a lively discussion during the Q&A. I'm looking forward to a great conversation. Today, I wanted to share with you a few thoughts. One is an honest assessment of where financial well-being solutions have had success in the industry and where we need to do more. And the other is a case study that will hopefully help you think through how you may want to approach anticipating user needs and design for action within your industry. So on number one, I would argue the beginnings of financial wellness as a concept in the insurance and financial services industry started about 5-6 years ago. Prudential led the charge in a lot of it, and it was groundbreaking and exciting and has become often a staple of conversations with clients. Now, several factors drive the movement to financial wellness programs today. The first worth highlighting is an increased recognition of employee financial stress. Symptoms such as insomnia, anxiety, stress-related high blood pressure, and even depression are all physical symptoms that can manifest because of the financial stress the person is feeling. And with it comes loss of productivity, a workforce that is not ready to retire on time, which doesn't allow for the younger employees to rise up through the corporate ladder, causes morale issues, and can spiral out of control. And if you think about an insurance company that is insuring someone's health, someone's life, or against disability, the first order of priority is to keep you as healthy as possible. So this becomes the nexus of mutual benefit for employer and insurance companies and an individual to stay on top of their financial health. Now, in practice, there's still challenges on how the industry engages with the end users and to have their financial health discussion with them. We're still oftentimes in the push mode. We rely on the individual to engage versus being engaging ourselves. I do think some of the fintechs have cracked the code, though. Acorns comes to mind as one that did not go against the grain, but harnessed the power of behavior and designed savings to be part of spending through their Round Up the Change concept. Now, the concept isn't new, but for those of you who don't know what Acorns does, they have essentially plugged into spending ecosystem that allows the user to round up the change and then invest it. So they're not asking you to stop your habits. They're using your current behavior to help you save. I can also give you an analogous experience with Noom, the weight loss app. They are making it cool to be knowledgeable about nutrition. So much so that you can sound super smart at your next cocktail party. And they're dropping little nudges across their entire experience to help people build habits. So my question is, how can we in the financial services industry mirror this closer? I have a few suggestions. I think they're all common sense, and yet the industry has struggled to implement them. I think first and foremost, we need to help people shrink their big goals into a daily afterthought. The industry has done a great job of encouraging auto-enrollment and auto-escalation in the 401k space, but what does that look like for regular day-to-day savings? I shared how Acorns is doing it, which I think makes a lot of sense and is very natural. The second one is illuminating one step at a time. Providing education at the right point in time and in bite-sized pieces is super important. Sending people to a research paper or a lengthy article will not elicit the desired result. And then, one of my favorites, inspire confidence. Once people start seeing that it's possible for them to do this, to get their financial house in order, they are so much more likely to keep going. And people respond to different motivators. Test them out with your users. Use praise, use progressive progress status, use incentives that have nothing to do with their specific goal, like rewarding themselves with a pricey cup of coffee. Does it go against the goal? Maybe. But without it, they may abandon the goal altogether. So you're choosing the better of both worlds. And here are some specifics. Help users make trade-offs. Everyone's resources are finite, and users want a strategy for prioritizing, especially among medium-term goals. So telling people they need to set a goal is not enough. Helping them think through which goals to set and in what order is what makes progress. And then lastly, give approachable entry points in language. Starting on a path to improving financial health can be so overwhelming, especially if you're behind and are already feeling anxiety. The financial industry has been conditioned to use jargon, and a lot of us have been in the industry for a long time, me including, and we don't even notice it. It's important to have your copy pressure tested by users. I love the language Noom uses. It is so approachable, so human, so matter of fact, that, it actually elicits the result of people wanting to continue to learn more. And then lastly, show how others do it. While people are shy sharing their individual financial information, they're very eager to find out how others, especially in their demographic and industry, manage money. That is why you have Bogleheads, a forum that started in the name of Vanguard founder John Bogle, where people anonymously share their information and seek peer advice and guidance and ask a lot of questions. And if you actually check out that forum, it's very engaging. And so, really, how do you take a lot of these conceptual statements and implement? Well, I have a case study to share with you. It revolves around a difficult point in a person's life, struggling with their health. I want you to put yourself in claimant's shoes, a person that is filing, for long-term disability. What are they thinking? What are their top priorities? Now, my advice is do not pepper them with 20 solutions that you have in your arsenal. Only provide the ones that you believe would be the most valuable. In this case, long-term disability claimants have been out of work for 6+ months. They're now in the situation where their benefits may be getting reduced to 50 to 60% of their original income. They will be worried about making ends meet. So we provide a solution partnering with a nonprofit called GreenPath that will spend an hour with them for free to see if they can budget their way out of this situation. Now, in addition, a lot of people in this situation have taken on debt because they have significant medical bills. There are, unfortunately, a lot of situations where people lose their homes because of the mounting medical debt. I have a neighbor who just went through this, and it is gut-wrenching. So we are offering a solution that will also help them think through their housing situation. We're using this entry point to provide education and information on the services that they can have access to and in their specific time of need. And as you can see in some of these snapshots of the material, we're adjusting the language to the audience as well. So if you think about what we've done, we've used an entry point that we know of and we have data around from a disability filing perspective. And we're just bringing solutions to people that are so needed in that time. If we had served it up at any other point in time, they may not think about it. They don't need it. But in this situation, it obviously comes very close to heart. So in conclusion, I hope this use case and some of the other ideas I shared give you some tangible ways of thinking about your next project or an initiative and taking a human-centered approach to your solution design. Thank you for listening to my talk, and I look forward to our discussion live.
And of course, I'm the one who finds myself on mute today. But thank you, Julia, so much for that.
No worries.
So super excited to chat live here for a bit. And, I love how you brought in some of those ideas around behavior change, which is really an interesting and important angle, I think, to, look at all this financial well-being stuff. How can we help people make those decisions and kind of get to where they want to go, within the products and services we offer? It's super, super important.
Yeah, no, I appreciate being on. It's fantastic. I'm glad I'm able to share some of these insights, and they came through long at this point, a pretty lengthy career in financial services, but I've been lucky in the last, I would say, maybe 7 years or so, to kind of get a glimpse into how the design industry is doing it, how you guys are doing it. So I've taken it very close to heart, and I've been an advocate of human-centered design and sort of a different approach in financial services to helping people kind of find different types of entry points.
Yeah, no, absolutely. And I'm curious to hear, we've had this initial focus, as you mentioned, on financial well-being and wellness for about 5 years now. In that time, what have we done well, and where do you kind of see us going next for innovation?
Yeah, absolutely. Fair question. I think a recap is in order. So what have we done well? I think in the last, 5, 7 years, we've convinced most of the employers that providing financial well-being benefits is in their best interests, right? So I would say at this point, about 90% of the employers that we work with, and in general, almost across all industries, have developed or are developing a financial wellness strategy. And I'm not talking about small mom and pop shops. That's a lot more difficult for them, and we should have a discussion about how do we help people that work, in smaller businesses. But in general, financial wellness as a concept has certainly become a staple and an important part of the employer benefit programs. And the value that employers are trying to derive out of it is enhanced ability to compete for talent. I know earlier in the conference we talked about sort of the Great Resignation, right, and what's happening right now, and competing for talent through benefits packages and offering more than just your life and health insurance is becoming much more needed in the space. And then pandemic certainly helped solidify that even more so. We're spending more time focused on finance issues, less productive at work, more distracted. It manifests itself in health-related challenges like stress, and as a result, time off work. And sadly, a lot of the pandemic-type benefits, like the moratorium on evictions, is ending. So it has changed the workplace and how we look at health expenses, and sort of in the context of our overall financial well-being. And we're looking to employers for help. So that's, what we've done well. Now, in terms of where we need to do better, and the impetus for innovation, I think, will lie in engagement. Financial well-being services and products are kind of, like broccoli. We're trying to get people to eat it to be healthy, but it's not fun. It's not interesting. Right? It goes against the natural desire for sort of instant gratification. So it's important for the employers to be very vocal about the benefits that they offer. Oftentimes, we as consumers don't know what is being offered, but making the experience fun and engaging is like the next frontier for financial services, because it's been done in fintech. They've done a great job in Silicon Valley. We just haven't gotten there yet.
Yeah, no, absolutely. Yeah. I have not heard broccoli yet as kind of the metaphor for financial services, but I think it makes sense. And I think with that, right, you just kind of mentioned, like, we need to bring this to folks. We need to meet them where they are to an extent. It's a complex place. And how do you determine, I think you mentioned kind of during your talk, like, we want to present these things in bite-sized pieces, these complex ideas, these thoughts that people probably don't even want to think about. But how do we kind of present that to people, and how do you know what bite size is?
Yeah, Great question. So sticking with the food analogy and, bite size. Personally, I like to hear and tell stories, and I think a lot of people are like that. So yes, finances are complex, and you have to know your end users well. So if you're engaging with someone who's looking for a complicated investment and tax management advice, your approach would obviously be very different than someone who's just looking at their financial picture and doesn't know where to start. Um, but what I mean about sort of bite-sized and communicating through a story is allowing people to explore simple scenarios. Kind of like, what if I buy a greyhound? Well, the cost of dog food is X, the veterinary care is Y. Consider that when you go on vacation, you would have to have a sitter for the puppy. So it's the ability to kind of build a picture, build a story around the goal or around the task that people are trying to do. There's a company in England called Lifeties, or maybe it's pronounced Lifeties, I don't know. And they take the approach of showing you what it would take, for example, to buy a home. It gets into different areas of England and the cost of living and tax implications. But what I like about it is that it doesn't ask you, well, what house do you want? Where do you want it? How much can you spend on it? Which can all present questions people don't have answers to and sort of make the entire process stressful. So I think we can do better, create better entry points into these types of conversations in like these small incremental sort of paths or questions.
Yeah, no, that's a great point. Absolutely. I think representing things in kind of this anecdotal story type way makes a lot of sense. I don't know if anyone else has seen this idea of, showing raw numbers, showing a graph, and then showing a story. And the fact, we retain that story, so much more than some of the graphs and the data that we see. So I think that's a great point. I guess along those same lines, do you have any guardrails or thoughts about the mediums we use to provide some of that content, positive feedback, set goals? I know in the world today, we have live people, we have digital advisors, we have digital content. How can we become that trusted guide for folks?
Yeah, I love that question. It's such an individualized choice, though, so I think that's what makes it difficult, right? But in terms of mediums, I'm a big proponent of plugging into existing ways of operation, meaning, if people are on their phones all the time, do mobile first, right? I think mobile first these days is the answer, but it's expanding, right? So for example, can you plug into wearable ecosystems, right? And can your sort of financial daily minute prompts be served up to you that way through, your Fitbit or whatever your wearable is? And maybe while you're on your run, you can start thinking about what you need to do next to improve your financial picture. It's being able to stay top of mind in people's day-to-day things, right? Like our health is much more top of mind, I think, than our financial health for a lot of people, because it's difficult, right? I don't want to think about it like it'll sort itself out. But if you're serving it up through sort of the daily user experience or individual's experience, they're starting to think about it. And yes, at some point when your financial situation gets complex, meeting with a person or having someone review your decisions, becomes much more prudent. And even with advisors, I think there's an easier way right now. Meeting with an advisor is such an ordeal, right? Why can't it be, especially now that the virtual way of doing things has become so comfortable, being able to just schedule something, on your phone and just sitting down and talking to someone on your own time and not like, for 2.5 hours, but maybe 15 minutes here and there. Like it needs to become much more sort of fitting into your life versus the other way around. Otherwise, I think we're still going to be in the position of people just, being, with their head in the sand and kind of saying, I can't do it.
Yeah, no, absolutely. I think you nailed it kind of what you mentioned during your talk. We're still too reliant on the customer to engage us. We need to find a way to engage them. And again, engage them where they are. That's so important. So Julia, this has been fantastic. We so appreciate you sharing and being here today.
Of course, anytime.